Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 2nd of March 2019, and we're providing our gold and silver weekly update for the week ending the 1st of March. Gold fell $35 last week from $13.27 to $12.92, having hit a high of $13.32 and a low of $12.90. In sterling terms, gold finished the week at £978, that's down £38. And in euros, it closed at €1,137, that's down €34. Silver fell 71 cents, from $15.92 to $15.21, having hit a high of $16.01 and a low of $15.15. In sterling terms, it closed at £11.52, that's down 67 pence. And in euros, it closed at 13.3 euros, that's down 0.66 euros. The gold to silver ratio rose over 1.5 points, from 83.4 to 1 to 84.9 to 1. The Dow Jones closed on Friday at 26,026, up 110 points on the day and up just 5 points on the week. And the NASDAQ closed at 7,595, up 62 points on the day and up 68 points on the week. And the S&P 500 closed at 2,803, up 19 points on the day and up 11 points on the week. Brent crude fell $2.07, from $67.12 to $65.05, and US light crude fell $1.46, from $57.26 to $55.80. The dollar index stands at 96.52. That's up a very slight 0.02 on the week. Last week, we stated that we expected gold to migrate slightly upwards towards the 1350 level, in agreement with technical analysts at the time, though we did misspeak and said 1550, as some of our subscribers pointed out. Our apologies for that. We also pointed out that we expected to see gold operate within a $100 band during its consolidation period, which encompassed its current level. That said, the bullish sentiment could not be continued, and we did in fact see gold fluctuate downwards with a $15 fall on Friday afternoon, closing almost at the week's low. It now stands at the technical floor of $12.93, and a fall below this level will see gold likely move further downwards towards the next support level of $12.75, and then $12.50 if that is breached. We had weak PMI data from Europe, which included Spain, Italy, Germany and France, and UK PMI also eased to 52 from a revised figure in January of 52.6. This resulted in overall dollar strength, and therefore commodities generally finding it difficult to hold or maintain recent gains. On Thursday, we saw GDP figures confirmed for 2018 at 2.9% for the United States, with quarter 4 estimates at 2.6%, compared with an envisaged 1.9%. As we said in previous reports, frankly, we shall have to wait until the figures announced at the end of the month, that's end of March, and possibly April, before we can have complete confidence in their accuracy due to the government shutdown in December and January. Core inflation was confirmed at 0.2% for December, with January figures delayed. However, market manufacturing PMI was down in February compared with January, as too was the Consumer Sentiment Index for February. Apart from an initial opening blip upwards, silver prices, like gold, continued their descent all week, with the largest dip of 36 cents happening on Friday. Again, we were a little too bullish on silver, as it has fallen below what we regarded as an appropriate $1 trading range. If silver does not recover on Monday, then we can see its price move down towards $15, where there is some support, but then further towards 1450, where there is very strong support. We must be mindful that what is worrying investors is a slowdown in the Asian markets, and also that the Chinese New Year gold trade is now over. And we may very well see prices fall back further, as we predicted at the start of the year, for mid to late March. So let's take a look at next week's economic reporting of consequence. On Tuesday, we have Market Services PMI for February, plus ISM Non-Manufacturing Index for February, plus the federal budget figures for January. And on Friday, the all-important non-farm payrolls for February, also highlighting the unemployment rate and average earnings. So, we can see some movement in anticipation of those figures on Friday. But we shall look to Monday to see whether the downward trend continues or whether there will be a rebound. As we look, though, at the silver trend chart for the past 12 months, it does not look too exciting. We had a downward trend from June to early December and then a slight upward trend since, but these trend lines are being broken. It's hard to imagine that with all of the discourse we have week by week on this and other silver and precious metal channels, silver is standing at just 95 cents lower today than it was exactly 12 months ago. That's down 5.7%. And gold is down nearly $35 during the same period, which represents minus 2.6%. So although both down pro rata, gold has performed marginally better, or 3% better, than silver. Thus, the high gold to silver ratio. And we're all reminded of all of the pumpers who said in 2018 was going to be the year for gold and silver going to the moon. And yet, it hasn't. And the same again at the start of this year. And do not be surprised if 12 months from now we say that there's been less than a 10% movement in either prices, or in fact that they may even have moved lower. This is, though, and we admit, a great accumulation phase for the long term. We are still expecting to purchase gold sub $1,200 sometime this year and silver sub $14, with our most pessimistic forecasts being around $1,100 gold and $1,250 silver. Of course, these levels may not be reached. However, with the continuing strengthening of the dollar and turmoil elsewhere, there is no reason why they cannot be. Like many, we are also wondering, in the deep dark recesses of our minds, whether Jim Rogers and Harry Dent's forecasts of $1,000 gold and $10 silver can actually be achieved. What we find is that when we use our fundamental analysis model as our core foundation, our pessimism on prices is often supported. It's only when we overlay with technical analysis and identify positive upward movements do we also get caught up in the bullish sentiment, only to see prices fall back again to where our fundamental analysis says that it should be. Perhaps there is a lesson there. Tomorrow, Sunday, we're uploading a very expensive course on cryptocurrencies, which is completely free to our bronze and silver members. And hopefully each of you should have received your free PDF via email on the same subject. A reminder for silver members that our webinar goes live on Saturday at 9 p.m. GMT. And if you haven't registered, please do so by either going to your email or on our main site at illuminatisilver.com. Finally, we've been asked by some of our paying members to release some of the Inner Sanctum videos perhaps a month or two after they were recorded and make them available to everyone. We shall do this, but only with some of those videos. In other words, a small proportion. The one we did release on Wednesday and has already received some 6,000 views and quite a few comments which will be answered over the weekend is entitled Why Silver Will Never Be Used to Support a Global Currency. It's well worth a listen to if you haven't already done so. Also, by Wednesday, we are uploading another 5 new courses on the website, so please pay it a visit in case they are of interest, and once again, they're free for bronze and silver members, and would normally cost anything from $25 to $100 each. Meanwhile, we hope you have a most prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.